The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi, everyone. Basil, Chapman, sitting here for Larry Pesavento, and hope, Larry, you're feeling a lot better. Yesterday when you called into my show, tell me that you wouldn't be able to do yours, and your voice sounded very poor, and I guess you need a little time to relax, get that throat massaged, and doing the job the way it's supposed to do it. In your robust voice, we'll be expecting you back soon. So here we are. Dow's now down 43, down 39. Whoops, some buying just came in, and it's down 39. S&P's down 4. It had been down a lot more earlier on. It had been down almost 90 points, and the S&P was down 10 points. So this is a pretty darn good, the buying just keeps coming in. But at the same time, there are certain areas that are getting a little tired, a little worn out. So for my subscribers in my opening call, we did get some short positions. And in fact, we just added to the long side this morning in a particular area that has done very well. And we had the trade. We took a little profit the other day, got stopped out because I got a little nervous about that market. Instead of just doing your homework and saying, oh, wait a minute, a lot has to happen for this market to really tank. But in the meantime, back at the ranch, this is pretty good action. And look, the E-minis went right here to that 9-period moving average. Hasn't closed so far today underneath it because it's bounced right back. And it's trading now only 250, down 250 in the E-minis. This is December, 2069.75. And look, the 120-minute chart gave a peak, D-top, got that rectangle formation, went sideways for quite a while, then broke down, gave you a 1-to-1 to the downside, more than that, went down this morning all the way to 2061. Now it's up 7 or 8 points from that low. So this is a good candle that we're looking at. Will this continue? The question is, will this continue into the end of the year? Because my reasoning has been for a while that markets that survive September, October, the very bad months of September, October, if they are bad, and then go to recovery highs, or in this case, all-time highs, invariably close the year close to or a little higher than the yearly high. So we're going to be watching this closely. I'm of the opinion here that there's a rotation going on, that we're just beginning to see some kind of, how can I say this? There's some kind of whittling down in the very strong leading sectors as fewer stocks participate to the upside and the leaders just keep going higher. But at the same time, you've got some areas that have been very, very weak that are starting to show some buying interest. Let's put it that way. And that's kind of what I'm looking at here, the buying interest. I don't know if it'll be the stock we chose today to get back into happens to be in leg E. That's not such a good idea, DOE, because that's where you can get your biggest pullback. But I think that this sector's turned the corner. And I'd like to be in it. So it's the way to do it. All right. So getting back to the markets, the Dow is right now, this is the 4th day of December, at down 34 at 17,877. S&P's down 361 in 2017. Comp index is down, up $1, is up $1.36. Nice. At 47.75. You've got the IWM. I just wanted to do that. IWM right now is acting quite well, down 42 cents, holding above the 9-period exponential moving average. That weekly, the 120-minute chart is really going to be a very big issue. If it takes out the IWM, the Russell 2000 ETF, iShares. If it takes out 117.71 in the next day or two, that's very positive and says that the IWM, which was a leader earlier in the year, then became the laggard, now is showing internal strength, which is very interesting. So that's that whole rotational thing. And it might be that they have a certain sector there that's predominating and acting well. So, and then I had a question here. Would you look at natural gas? Absolutely, we'll do that right now. At NG, when I looked at it earlier this morning, it was looking just ugly. And this is with the bad weather. It's just saying that there must be a glut of some sort because you've seen no interest in natural gas. I'm going to tell you what I'd be looking at. It's at 3.670. This is the continuous contract. This is the area of major support all the way down to 332. That's huge. So if this candle right here, the candle of the 24th of January with the low of 3.576, if that holds the support, you could see a bounce back to the 4.11 area, the 9-period moving average in the weekly chart. But I don't see anything yet in the daily other than to say we're within, I would say we're within 2 sessions of the very chance that you could get a turnaround, and it could be a V-shaped turnaround if the weather's very, very cold, and it has to happen with maybe a doji candle tomorrow, and over the weekend, come in Monday, and it's already gapped up overnight Sunday. That's the way it would work. So if you were thinking of taking a position, I'm not that in favor of UNG. I find it does participate, but it's not a great vehicle. But if you were thinking UNG, if there's a doji close tomorrow, and on Sunday night you're able to trade it, and natural gas is moving higher, I say, okay, that's a chance that you can take to maybe nibble at UNG. But boy, you better have it, make it small and have a very tight stop. I prefer to wait for the trend to actually reverse. Okay, so that's that. And then a couple of questions, but I have to get to in a moment. We've got our first caller, and I want to just quickly finish up here by saying I never discussed this at all during the last hour. I meant to in my show that bonds are at a very important level. If the TLT is able to get into the 125.70s to the 122.30s by Monday, that's going to suggest that in my long-term charts, this pattern that I squared off right here, the 30-year T-bond yield, the 10-year note yield, and the 5-year note yield, this is very important because a break in the yield, if the yield is going to break underneath 2.8%, that's just saying, you know what, you're going all the way back to test the 2676 area. I think there's choppiness. I think we're back in this choppy formation. Let's go to our first caller here. We've got John in Philly. John, how are you?
Basil, good day to you, sir, and thanks for taking the call.
My pleasure.
Basil, I wanted to ask if you could review with us the NASDAQ 100 MDX daily chart.
Okay.
Basil, we spoke the week after, it was probably like the 10th of November, after election week.
Yes.
And at that time, we had seen how the MDX had rallied sharply from October 16th to Friday, October 31st, and then it went sideways, and during that week of election week, the daily chart on the MDX was making this quick procession of peaks A, B, C, and D. And you and I spoke about the possibility that that would lead to a recycle in the Chapman wave count.
Correct.
And the most bullish scenario would be what you entitled a propeller shaft pattern.
Correct.
And that would give, I did the numbers, that would give a projection up towards 4,600, 4,625. Now, we've gone to 4,350, give or take, last week. And we pulled back, of course, sharply on Monday, as you well documented.
Yep.
But I notice on this pullback, we've just held beautifully the 9-day EMA. So, and just walking it there. My question, is there any reason not to suspect that we won't just continue marching higher towards that 4,600 level? And just parenthetically, I'd mention the monthly charts, we see that prominent peak back from the year 2000 up at, I think it was 48.15. I can't help but think now that we've gotten so close to that almost acts as a magnet, like price just wants to get up there and at least tag that. So your thoughts, please.
So what I've done is I'm showing here on the charts, I've got the monthly NASDAQ 100. I've got the IPO back in 1999, June, I think it was. Oh, let me just double check. Oh, no. That was the wrong one. The QQQs were an IPO. So this goes way back. Good. I had this all notated. I don't have it notated right now. But it went, the NDX 100 index in March of 2000 went to 4816.35. Let me put this in 48.16, and I'll even put this 0.35 because it's kind of cute. And then what does it do? It drops a little. It drops from 4,800 and 16.35 down to 825.80. I would call that a 4,000 point drop, a serious decline. It rallies again to peak ABCD, then has another ABCD, and that's in the Chapman wave. What you look for, those four peaks going to a D. And at 2239 in October of 2007, it takes a dive and it comes back down to 1018, gets cut in half. And in November, it makes its low 2008. And this is fascinating because you might recall that in 2002, the semiconductors and the Dow made a low in October, and in March, the S&P and the S&P and I think the Qs. No, was that correct? Right, and the Qs did not were the same as the Dow, and that the S&Ps made a lower low. So I call that an internal low. That was the internal low that was made in October of 2002. And then the residual low was in March. And in March, the Dow held and the Qs held and the S&P went lower. Let me just double check that because I'm doing it off the top of my head. Was a long
Okay.
Yep, there it is. Oh, actually, what happened in 2002, 768, 788. Oh, okay. So that's what happened, huh? The Q. Oh no, it was March. That's right. Yes, there it is. So it was October. Oh, I remember now. It was July, and then in October it went to a lower low, and then when it came back down in March of 2003, this S&P just missed making a lower low, whereas the Dow and the SMHs. Let me double check. Yeah, the SMHs were way above. Good. So sometimes you get this divergence, and I just want you to bring that up because of where we are. I'll be right back. Hold on, John.
Thank you, Basil.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks. We're back, and we're back with John and Philly, and we're looking at the NDX 100. One of the things I pointed out is that there was an internal low with a residual low. It's a concept I came up with way back in the 80s when I was hand charting, and I recollect very well that there were periods where the Dow made some kind of a low that was, I called it the internal low because later on, within 6 weeks or so, 6 weeks to maybe 3 months, there was a retest of that low. But it was an emotional low, but technically all the repair work had been done, as you can see here, back in 2002. But right there you can see the stochastic and the MACD had improved, so that next low was not so serious. Look, the same thing happened in November of 2008 in the NDX 100, and then there was a successful test. The reason why, John, I'm bringing it up is because... If you look at the top at 48.16, you see the sharp pullback to 38.71 in May. Then there was a retracement for a full 4 months. 4 months, going to the September high of 41.47. Only 7. That was 7 points. So that's about 10%, so 17% off the top. And now look what happens. that technical is the exact opposite. Yeah, they're very weak, and then the market plummets. Same thing happened with that right shoulder failure in the Chapman wave. I call it a right shoulder failure. It's chapter 21 from slide 362 in my CD. Same thing happened May of 2008 as the technicals failed. Well, we have that as a on the upside, and we have it on the downside. So when I'm looking at this, I've got this now as a potential leg F in the monthly, but there's a very good chance that that peak D in May of 2013 with just one candle down, holding that thick black 9-period exponential moving average, really was Chapman wave instant restart, and that this could in fact take us to higher levels, even if there is a pullback to the 4,000 to the 3,800 level, just as we had last month, a very sharp pullback. And in fact, what would happen, this will be F/B, and that would suggest that we couldn't get a D until sometime in the first quarter, the first 3 months, something towards the end of the first quarter of 2015, which is kind of what goes to the issue involved. Why? Because you're absolutely right that 4816.35, once you cross a certain threshold, and in this case the threshold was the high of 41.47 back in September of 2000, that right shoulder failure pattern, which was devastating to this market, once you cross that threshold, you're looking at the very good chance of the magnet of the previous high, something I never expected. When I gave a major sell signal that April of 2000 for my clients, I said we will never again in my market lifetime see those tops. And here we are, we're within 6 months of maybe making that kind of retracement. It is incredible how steady and how powerful this market move has been from the March lows of 2009. But your question really has to do with the propeller sharp pattern in the daily. And all I can say is that now we're starting to flatten out. In fact, if I did this right now, you would see that you could make a case that we are arching over, that you could break to the upside, but it would be a nominal break, and that we should come back into test the 9-period moving average of 42.94 with a really good chance of testing somewhere around this doji candle of 41.94, the low of the 17th of November, at some point over the next few weeks. But yes, the pattern that we're looking at, really the propeller sharp, is more visually correct in this monthly. Seldom you get it in a monthly chart, but absolutely look at that monthly chart. And the circle I've got here is for the instant restart, but this is really the true circle right there. That's the circle that would be 1-to-1, and I'll show you what I'm looking at. That would take it from the low of 2009 to that high there. A perfect 1-to-1 would take it from there and just extend it up. I never do that. What I do is I go from that level to the base, and that base is right there, and that takes you to somewhere into the 4,400 area. So in a sense, I'm answering your question, but just on a shorter-term basis, the way the NASDAQ is walking the 9-period exponential moving average, that black line there, is really very positive. When all the MACD and stochastic actually crossed negative, but the price didn't. So, John, I hope that helps. You got another part of the question at all?
No, that's it. Thank you.
Thank you for calling. I appreciate that. We'll be right back, folks. Basil Chapman sitting for Larry Pesavento.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Yes, so I got actually a whole bunch of questions. Let me get to these questions. Number one is, what was the conclusion on Z's call, on John's call? The conclusion was that right now the Qs are still acting very well. The NDX is acting very well. It held the 9-period exponential moving average. And I'm going to go through a question. I had mentioned Mike's question earlier. So, Basil, you might read this during your break. Below is a clarification. Below is what I sent earlier in the day. However, I wanted to clarify what I sent, and I should have done so in the original email. The top 15 holdings in the Qs are Apple, Microsoft, Intel, Google, Facebook, Guild. Google is Guild is Gilead Pharmaceuticals, Google, Amazon, Cisco, Amgen, Qualcomm, and what do I have? Comcast, Celgene, Biogen, IDEC, and eBay, in order of greater percentage holdings, with Apple being 14.40%. I don't advocate shorting Qs unless there's a meltdown like we had from late September into middle of October of this year, which does not happen very often. I might ride the Qs down for 30 to 50 cents every now and then, but not too often with the above heavyweights in the Qs, especially Apple. I was just trying to get an idea of where the Qs would fail or fall to this time of the year. Fall to. For this time of the year is usually bullish. Thanks again for your market guidance. So I'm going to cover that right now. Then I had another question at the end of your... hi, Basil. Yesterday in the last segment of your shift, possibly the last segment of Larry's shift, you covered, someone called in with a great question regarding the market and the IWM. You said you would go over it extensively in today's show. I missed your first show. Did you cover it in that earlier shift? If so, I will download and listen to it. If not, can you cover it? Thank you, Basil. Merry Christmas, Dusty. And another question about GDX from Max in London. So let's just go one step at a time. What I'm looking at here is that there's a very good two things. Now the Dow is up forward, was up about 20 just a moment ago, and the S&P is unchanged. That is really buying intensity. I get a little nervous when I see that. It's like people are afraid, but you got to deal with it. I mean, what it is what it is. So when I'm looking at the QQQ series, the weekly chart, the MACD is good. The stochastic, this is the week that was really important. The third or fourth week after the MACD has gone from under 80% to over 80%, that's where you got to watch out for what I call the double camel hump. It's the U-shape, the arch pattern, like an M pattern. So a soft M. So this is the right shoulder there. So if, in fact, by tomorrow, if earlier in the day the Qs were at the low and closed at the low, and then tomorrow there was an ugly day again, then what we would have had is that the stochastic would have gone from 96% in the weekly probably to about 80 to 91 or 88, and then we would see what happened the following week. Holding like this is very positive. I mean, it would be fruitless to say that it's not good action. This is good action, but the day is young, but it's still very good action for 2 hours into the session, 3 hours. And now what we're looking at is that I still think that if there's no high above 43, 47. Now, most people don't look at the NDX 100. If you don't mind, I'm going to go to the Qs. It's more practical. So the Qs had a high last week. The QQQ Trust Series Power Shares had a high of 106.25. So far, the high is 105.92. That's just 30-something cents away. So I'm suspecting that if this is going to follow through to the upside, then that's really going to be the test. If there is a decisive close in, remember, we're looking at the 120-minute chart. It went to leg D, looked like it was a peak D, but you can never say until the bar is complete. That's the thing about the Chapman wave. If I only look for the criteria of peaks and troughs, I only need the high and the low. I don't need anything else. You need the other things for many other aspects. So now look at this. If, in fact, this is usually a failure pattern. So if by the end of the day we give back, instead of spiraling up Dow 63, S&P up 7, and the Q's up, I'm saying, what if there's a failure later on, that this was just a short covering rally, and in fact we close more in the 105.30 area than the 105.60 or 70 area, and tomorrow is weak. That would suggest that in this particular pattern there's tremendous support, but that support better not break. And that support is at 104.76 and 104.42. Just make it as simple as that. A close under call it 104. A close under 104 is very bad. All right, short term, that is. Only short term. The weekly chart is still looking great. Now let's go back to the weekly. I didn't show this on John's chart when we were looking on the NDX, but if you're looking at this, look at the resistance. That's constantly the resistance area. That means a power move above this long-term trend line would be very impressive. It will say, yeah, you can come back, but you've raised the base of support. That's really important. For the one-to-one, what we're looking at is what I was saying is that the one-to-one suggests in this particular pattern that I drew it in, That's the stork leg pattern, which really looks like a propeller shaft. Single leg up, well, a leg made of many other peaks, but a huge move up. Sideways consolidation, could be short, could be long. The propeller shaft is usually not too long. And then an equal move to the upside. And what does it do? That would take you to the 120.50 high. And we're already at 105, 106. So it makes it look like a magnet is there, as well as this trend line right here is suggesting that by May of 2015, we will have made that 120.50 high. Okay, now let's get out of that. So that's what I'm looking at in the cues. On the short term, that is on the daily chart and the 120-minute chart, what I'm looking at here is this pattern. It's walking the 9 EMA. That little red line is suggesting that the upside could go a little high, but it's starting to be limited. In other words, it's not a big breakout candle, that it could sneak above 106.25. Probably will have to do some backing and filling. So no signals yet to say there would have been if it was a down session today under 104.90. But it isn't. It's trading at 105.70. Day is young. Right now it says save the day, but wait for the close and let's see what happens. Would I short? I just don't think going into this period, the QQQ is really where I'd like to be. I'm going to be watching to see if it fails or if it holds. That's number one. Now, the other thing is, I had a question then about, is it the okay, and then I did finish with the IWM. Let me just review it. What I was saying is that the action in the IWM right now is way more solid. This is the pattern I'm looking at. It's the soft W pattern. You see there? Altogether, it makes a cup formation. And it says, if I break out to the upside, I'm not going to break out by very much, but enough to scare everyone to think that I've started a new buy mode, but I really do have to come back and test the body of the cup. And that's really what it's saying. See that? Like a pair of half glasses, reading glasses. And it says, I got so much resistance in the 117 to 118s. That would be probably just a tad higher maybe. But this is the area that says, I've got good support. I will fail. That's the IWM, the Russell 2000 iShares. I will fail if at any point in the next, between now and next Wednesday or Thursday, a week from today, if I take out 115.50, it's at 117.16, that should be, I mean, if it does that, the general market will also be pulling back. It says if I take that out, or I take out today's low of 116.22, then yesterday's low is going to be really important to 116.02. So far, I'm just moving sideways in this move that says going into the, after making the September and October lows, going into the end of the year, if I've survived this far, I should manage to hold up pretty well. That's kind of what it's saying. Now, Max in London says, hi, Basil. Wondered if you could give me your thoughts on gold in the short term, smaller time frames. Also, GDXJ, if you have time, but not essential. I just went along the JNUG. I don't think I've ever even known about that. This is called Jnung. DX Junior Gold Miners 3 times bull. Whoops. It's at 3.42, down 28 cents. So I just went along using my own methods, although I do count the waves in 10-minute charts. Cheers, and having 2 hours of use, no bad thing, and really enjoy your opinions and methods. Thank you. Max in London again. So, Max, this is what I'm looking at. The pattern that says that there's an H formation right there, look at that, a lowercase h. I'm not going to get that all CD out, but I'll show you what it looks like. It's right here. I'm even going to extend it to today. Says that no matter what, that low of 280, well, you know, this is really tough. When I'm looking at something that gets reconfigured every day, it's not quite the same. So it's the gold miners ETF. So if you don't mind, let me go to the GDX. I think I'll go to the root, which is the GDX. It doesn't look the same, does it? See, these tracking vehicles are sometimes confusing. They don't look great. What could I do then? So this is the gold miners. I need to stick with the miners. Is that the HUI? Let me just ask Gold Bugs Index. No, that's Gold Bugs. Is that the XAU? Wow. None of them look like that. Okay, I'll deal with the chart that we're looking at. Although I shouldn't, because I'm really looking at GDXJ. I think the GDXJ is probably closer, and it's gone, look, peak A, peak B, peak C at 29.76. Someone in the den's bound to tell me, correct me. 29.78. So, yep, this is a D, so it goes peak A. Remember, we always want to get to that D, peak B, peak C, and peak D right there. And then I put in a down arrow because the price pulled back so sharp, but it did not break. The MACD did not break down. Let's see. All right, so now I thought someone in the den would have answered me. No. Okay, so what we're looking at here, I'm a little cautious on the gold stocks right now. For some reason, there are a couple that are acting fabulously, but in the main, let's see. Look, GG is one of those. It's got that same pattern. ASA is one of my favorites. Just in terms of it's ASA Gold and Precious Metals, so it's only like a fund of key South African stocks based in Bermuda, I think they are. RGLD, royalties should be doing well. It is doing better. They're not all acting all that well, but the RGLD is one of the better ones at 68.58. I'm going to answer your question because GDXJ, here we go, GD, and you are long. I'm going to do the GDXJ because it's just a slightly different pattern. You see how yours has been. These triples can really aggravate. They can act way worse or way better. Usually it's way worse. So I'm going to go with this. You see that there's a trend line here. The trend line wasn't broken. Goes from there. And it went all the way from there to there, but let's be kind and do it there. It's just about to be broken. I usually say trend lines are good, but you got to know where to take them from. And I usually take them not from the low, not always from the low. It's really from the first pullback after the low that's very important. So I'm going to suggest that the GDXJ, the Market Vectors Junior Gold Miner, trading at 25.61, down 71 cents. This is going to be key because you see this little H pattern right here? You do not want to see a break of 2 bars, 2 days that is, that takes out this low and holds under it, because the bar that takes out the left side low of 25.10 within 1 bar has to be right back again above that level, preferably trying to test a 9-period moving average or something. That's number one. Number two is, as it stands right now, the MACD could deflect higher. That's really what you want. But boy, it needs to do that. By the end of the day, this candle has to repair itself. It can't be at 25.58. It's going to be at 25.76 or something like that. And then try for the 26.75 level. So that's not good. And the stochastic's still on its way down. On-balance volume is quite good. Relative strength is not that great. And the histogram is just about to turn negative. I'm kind of careful here. Now, I would prefer to be buying strength. If you're going to be buying, now strength might be it's overnight and it gaps up. What can you do? I don't know how to deal with that. I'm just saying to you, the only way you can deal with that is to get in early, be very convinced that you're getting some kind of a bounce coming, more than a bounce. But look at that monthly chart. It's not good. I don't know what to tell you. So if you don't mind, I think gold is going to be reflective in some gold stocks. I'll deal with that when we get back. Basil Chapman sitting for Larry Pesavento. We're talking gold. I'll be back. Dow's up 1, S&P's down 1.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Hi, folks. Basil, Chapman, Tiger Technicians Hour, and we're looking at the chance that there was a single leg A-up spike this morning. This is what I call the single Chapman wave single leg A phenomenon or syndrome. Why? Because this is the one that you have to watch really out of the blue. Shoof, rocket ship up. You don't want that to fail. So the only way it will fail is if instead of holding the E-mini, he's holding two right there. Holding the 270 area, if all of a sudden you're looking at 268, I think that the selling will come in later on today. And look at the 120-minute chart. There was no technical, nothing happened with that spike up that was positive so far. So I'm calling that an E rather than an A. It says E/A in the 120-minute chart, that final spike to just above that rectangle high. Now what happens is going to be very, very important. I must tell you, everything about this market, I don't want to get in the way of the market. It's just what I'm seeing. And there's just so much here that says that this final move, this last week, has been a week of forced labor, that it hasn't been love. It has been fund managers being forced in. It just looks that way. It has the feeling, and usually there's a bit of a price to pay for that. It doesn't mean that you're going to go into a major sell scene or anything like that. That's just what it is. So I was busy looking at, for those of you, we're looking at the GDX. So here's what I'm saying. GDXJ, the question was, what do I do? And my answer is that I would not hang around. If it breaks at 25.63, you might get the dollar pulling back here, because if there's going to be a trend change, it's probably a trend change that includes the dollar. Why has gold not moved, except for that big spike on Sunday night into Monday morning? Why has gold not moved even higher right now? That's my big question. It would be so wonderful to be getting to those gold stocks at lows like this, but I'm just a little... At this point, I'm a little nervous. When I do my assessment tonight, maybe it's different. I would add a gold stock. But at this particular point, it seems a little risky. So the GDXJ, you need to see this max buy tomorrow, the latest Friday afternoon. It closes at 12 or something, gold, I think. I want to see 26.30, and then I'll say to you, oh, okay, kind of save the day or higher. But if it's taking out 25.40, and then takes out the low of 25.10 that was made on the 28th. Wow, that's just not good action at all. So be careful, that's what I'm saying. So let's do this now. We're about to wrap up. We're going to go to, you're going to go to Daryl Martin. He's back. Should be a great show with Daryl. So stay tuned, and don't forget, lots of things going on here at TFNN. Don't forget my opening call, and I will be back later this afternoon to be interviewed by Tom. And what we're looking at here is Dow's down 2, S&P's down 1. Let me just give you a couple of things. The VIX index popped up, and then it pull back. And this is going to be very interesting. Why? The VIX on Friday at 4 o'clock, for it to start a rally that's going to impact the market, it needs to get above 12.91 and hold, preferably above 13.14 and hold into Friday's close. Why? Because 13.89 is the 9-period exponential moving average, and it has not closed above there since that big spike to 31.06 back in October, the week of the 17th. So let's just sum this up real quickly as we wrap up. The Dow is starting to show a little bit of signs of where the E-mini had that pattern that I was talking about earlier on, that has that Chapman flat base restart, which says that the 2035.25 area should be tested by the 11th of December if it's going to do this time price match. We'll be watching this real closely. Any close in the S&P above 20.82 is very good action. That's all I can say. It's going to be tough. Okay, I'm out of here. Oh, we had Shivan in Boston. Sorry, Shivan on MS, but that's the way it is. Call me tomorrow. We'll do it together.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.